All right, welcome everybody to another episode of Cashflow Positive. This is the part two episode of how to negotiate like a boss. And I have brought in a boss negotiator, Michael Cline. He is an agent in the Poconos, an STR agent in the Poconos, not just any agent, but he focuses on short term rentals. He also owns and manages several properties. And for those of you who've heard me on episodes or just in general in the public, I always tell you if you're going to work with an agent, work with one who understands STRs, owns or at least manages them so they understand your situation and what you're looking to do. So he's not only an agent, but an investor. And he comes from a venture capitalist background. So we're going to hear more about that. But more importantly, in this episode, what I want you to pay attention to is how Michael breaks down certain ways you can negotiate when you should and maybe when you shouldn't negotiate or try to pull as much out as possible from these sellers, especially in competitive vacation markets. So pay attention, enjoy the show. So, Michael, without further ado, tell us more about yourself. Give us that introduction. Okay, so without further ado, Michael, welcome to the show. Tell us a little bit more about yourself.
Hey, Kenny, thanks for having me. So I'm a short-term rental real estate agent in the Poconos. I'm also a short-term rental investor. We have several properties here. So we have three. We self-manage them. We kind of operate as a family, my wife and then her brother. So we kind of do everything together. And I have, going back even further, I kind of have like a lot of different business experience. Started a career in finance. I actually was in venture capital, so investing in startup companies. And so I have like all this interesting, different experience, which kind of oddly is well suited for what I'm doing now with short term rental investments. And I actually worked at a VC backed short term rental company called One Fine Stay that was based out of New York,
Oh,
which was
cool.
a super interesting experience. And I learned a lot through that process. And actually, after the end of it, thought I would never get back into short-term rentals because the regulation environment in New York was just so, was so tough.
Yep.
And I thought like, but then the pandemic happened. We were in New York City. We were trying to get out of the city because Brooklyn in March of 2020 wasn't that great of a place to be. And so we actually stumbled upon the Poconos, and while we were here, obviously loved it. And at that time, it was kind of the perfect place to be. But then through just being out there, we started looking into the real estate market, and we were kind of shocked at what we saw, just in terms of like the real estate values. That like something seemed like too good to be true. But we did some research and then basically bought our first property in the Poconos with the plan of like, hey, it'll be a pandemic project. We'll fix it up. We'll rent it out. I obviously had short-term rental experience, so and that was kind of a wild experience for me because my estimate for revenue was about $80,000 that year, and then in 2021 we did $180,000.
Oh,
So
wow.
it blew my mind, and we naturally said, well, we should buy more properties in the Poconos, and so that's kind of what we did. And one thing led to another. And recently I became so I was actually an investor before I was a real estate agent, and also linked up with Savvy Realty and Tyler Kuhn this year, and that's also been an amazing experience and kind of supercharged the business. So this year has been a lot of fun.
That's awesome. So how did you become like what led you to become an agent? So you had these were you already an agent before you got these short-term rentals or was it after?
So when I was working at One Fine Stay, I was actually working with. We were kind of like a property manager, and we would actually go out and like do master leases for townhomes in New York City, and then kind of furnish them up and then
Hmm.
operate them. And so we were kind of acting as a principal there
Okay.
mostly, but I got to work a lot with a lot of other real estate agents in New York City, like mostly luxury, kind of the top agents in the city.
Yep.
And so I just felt like I learned a lot about the real estate industry before that.
Hmm.
But I never really had the inclination to really be an agent until after, we had, acquired three properties in the Poconos, and we were like, well, what else can I do with all this knowledge and expertise that I have around short-term rentals?
Yeah.
And so I was like, well, I should share that with others. And I didn't really like, I guess the other option at that time would have been to like start an investment fund or something like that for short term rentals. But for multiple reasons, I kind of didn't want to do that. So that's what I kind of just decided to, to just pursue that path. And it's been a great decision ever since.
That's awesome. Okay, cool. Um, let's put you on the spot here. I know I didn't prep you for this one. It popped in my brain, but I'm curious if you know, and if you don't, just round numbers or guesstimate, I guess. But how many transactions have you done this year in the Poconos?
About 30.
30. Wow. Okay. That's awesome. Okay. So that's a little over two a month, almost three a month. So lots going on. Let's actually talk about the Poconos for a minute because that's kind of a popular market, and I know some of our listeners are invested there or thinking about going there. What are your thoughts on the Poconos in general?
Yeah, the Poconos is. I mean, it's a very interesting and fascinating market, and I think it's kind of, I think it's easily misunderstood. But I'm really bullish on the Poconos. Number one, because it's like the closest vacation market to New York City. It just has more spending power within a 2 or 3 hour drive of, I would argue, any vacation market in the United States. And so in that environment, I think what's really important is having a really great product. And then if you find the right product, then you can do tremendous revenue and it'll be a great investment. I think the opportunity in the Poconos has changed a little bit because it was sort of a sleepy little vacation market for a long time. The subprime crisis hit the market really,
Mhm.
badly. And I think people kind of just wrote it off for a while. But I think, and a lot of people just weren't investing in the market, right? So you'd have like people buy like a house for $200,000 and like put nothing into it and then just rent it. And there was enough demand to do like, 60 or $80,000 of revenue, which was a great return, but that wasn't a great experience for people coming from New York City. So I think, the market is professionalizing, it's maturing, the product is getting better, which is actually, that's competition on one hand, but it's also kind of creating a virtuous cycle in terms of guest demand for people coming from New York or Philadelphia. So I think that's kind of happening. I think what we're starting to hit is the Poconos is just running out of that type of inventory. And so I think the opportunity is shifting now towards inventory that is, more unique, that is higher quality, and that is really hard to find, actually. Even just finding like a 3,000 square foot modern updated 5 bedroom home
Mm,
in Poconos is really, really challenging.
yeah.
And I think that, presents a lot of other opportunities, like new construction and other things that, we could talk about as well.
Yeah, for sure. No, that's awesome. Okay. So you've done quite a few of transactions this year alone, and the market. I mean, the Poconos is a huge. How many? Do you know how many vacation rentals are in the Poconos? Like thousands, right?
Yeah, it's probably like, any measures between 7,000 and 10,000, depending on how you measure the geographic area.
Sure. Yeah. Yeah. That's a good point too. Yeah. um, so big vacation market. Lots going on there. Lots of transactions happening and properties for sale and so on and competition. Um, this is one of the markets where we're still seeing multi-offer situations, escalation clauses, things like that going on. And so going to the kind of pivoting to the topic in the title here is negotiating like a boss. Um, 30 transactions is a lot, man. That's really good. I'm sure you're like, I want to do more, and you're growing and stuff like that. But that's still like really impressive compared to maybe what a lot of other agents did this year, or what they weren't able to do this year, with just kind of changes in the environment. But um, so tell me from a because you've helped a lot of my clients, and I've seen how you do these things, but I want to go through a couple different situations with you and how you approach them, what you recommend people to do, and how to negotiate with some of these people because we see two. Well, I'm generalizing here, and there's probably multiple scenarios, but I kind of see two main ones in the Poconos. You have properties that have been sitting for a while, and there's maybe some sort of issue with them. They're older or whatever, and that's pretty common there. Or you have properties that are like hot and ready little Caesars. They're out the door, like they're going to be gone this weekend, and so it's like, it's completely different. It's like one or the other. And sure, there's some in the middle, but the main two are we're kind of seeing here. So I want to start with the hot and readies. The hey, this is a property that comes on. Maybe it probably already has short-term rental revenue, and it looks like an incredible deal, incredible opportunity, and that 10 people are going to offer in on this thing in one weekend. How do you approach this? A client comes to you and says, "Hey, I want to offer on this. What should we do? Let's go." Yeah,
So it's almost like a little bit of a decision tree, but most of the time you can kind of tell whether it's going to be hot or not.
yeah,
Um, and there's slight deviations to that over time. Certain things change here or there, but most of the time you can pretty much tell. And so in that situation, what you need to do is you want to move quickly because you don't have a lot of time. So if you can create time for yourself, that creates advantages for you as an investor.
mm,
So you want to, get in and like, a big thing out here is like septic systems. So do you have to update it or not? What's the actual information? A lot of times, the only place to get the real information is with the township. So getting that information quickly, getting to the property, checking it out, getting a video tour, or getting in there and showing the property quickly, getting your pro forma together, and getting that out as quickly as possible to somebody that would be a good fit for, so they can digest all that information. Because if you kind of do it like, here's a listing, and then they wait a couple days, and then
yeah,
oh, well, what about this, and then okay, you wait a couple days, and then oh, can you do a pro forma, and then oh wait, the home is in contract, so we
yep,
just we just lost the opportunity to even bid. So one is just moving as quickly as possible and getting the information and getting prepped, so that if this is the right opportunity and you want to offer on it. And I think the other thing is, I mean, you don't know exactly. The interesting part about real estate is, real estate it's an information business. And so, just trying to find out as much about the other party or what the situation is, all of those things can be advantages. And also each person's different. Each seller's an individual. It's like a consumer business, right?
mm-hmm.
Each seller is an individual person, might have differing opinions on different things. Each agent is an individual, and has different, operates their business a little bit differently. So if you're really quick and it's a really good deal and you have an investor ready to go that's very decisive, then, the first thing I would do is I would just call them up and, like say, hey, what do we got to do to take it off the market? That's always worth a shot. It doesn't always work. But, at least you kind of, there's always a chance, right? So that's number one. And sometimes you even, you offer a little bit more. So I represented my sister-in-law on a transaction recently, and that's kind of what we did there. We got in there before anybody else, and we offered, said, hey, if you accept by Friday, we'll give you $5,000 more, and they did. And so that worked out perfectly. So yeah, that's another little trick, is really just trying to figure out what it's getting in there quickly and figuring out what it's going to take to win the deal.
Mm,
So if that doesn't work from there, then obviously you have to, think about how you're going to make an offer that would be, that's going to get accepted.
yeah. I want to go back one step here and just say, like, I think that something, while you were talking, one thing that stood out to me is your first step in moving fast is already having a relationship with an agent in that market, right? So like, think about it. You see, if you're on Zillow and and I'm kind of speaking to the people here now. Michael, you just nod your head, yeah, because you should agree with this. But but I mean, if you think about it, like, you're on Zillow and you're like, oh wow, I see this deal, or I see this house I really like in the Poconos, but you haven't done your research on the area to know about the septic things, or I know some people are like, well, what about regulation, or what about this, or what that, and if you don't have somebody who's like, understands that market as an agent, um, like, you're one step behind other people who do. And part of moving fast is understanding like having the connections, the resources, already knowing a lot of the details of the general details of like the regulation septic things beforehand, before you even get into all that. And so that puts you a step behind in terms of everyone else who's interested in that same property. So having the connections already before you start diving into properties, I think is important, and something that we teach when we're teaching people how to find markets. We're like, great, here are the agents in these markets. You need to have a call with them and talk to them about those markets, and before you even start looking for properties. What do you think about that?
Yeah, I mean, 100%. I mean, you also said something about each agent's different, right? So you
Mhm.
don't exactly know how they're going to operate. But one of the, I know a lot of these agents, so there's kind of a lot of subtext that, is on the Zillow just on in kind of how it's presented and who the agent is. But the other thing I always try to do is you also like call up the agent, and I know what to ask them. And I try to get, I'm just trying to get information, right? That's all I'm trying to get at that point. And
Mhm.
some agents will give it to you, some agents won't. One of the interesting things is that I think a lot of people think that if they don't use an agent and they go straight to the listing agent, that they're in a better position. And I think the only benefit to doing it's really hit or miss depending on the listing agent. The only benefit to doing that is I think you have at least a direct access to information from the listing agent because they're getting it faster than the
Yeah.
other agent. But you'd be surprised because having somebody advocate for you, ask the right questions from the listing agent. They'll a buyer's agent might actually be able to get more and better information from the listing agent than you would even know what to ask. And then
Yeah.
also advocating for them and positioning your buyer, knowing what not to say and what to say. And I think a lot of times, you know, you still got to be the best offer, right? And so
Mhm.
the listing agent, I actually think probably, 80 or 90% of the time, having a really good investor agent is going to help you win the deal versus trying to do it directly with the listing agent.
Yeah, I think you'll get better terms. Yeah, yeah, and that's yeah. I talked about that too. So if you haven't listened to the part two episode, people listening to this, or sorry, the part one episode of this, go back and because I talk exactly about what you just said. Don't try to do it on your own. Use a buyer's agent, especially if they're investor friendly and knowledgeable. Okay, so let's move now and talk about the actual offer. You started diving into a little bit about going quickly, making moves, even throwing out, hey, we'll give you 5K more or whatever, just to move faster. But if it is going into a multi-offer situation and they're like, we're going to wait till the weekend, how do you negotiate? How do you try to it's not even about negotiating, it's about getting the most attractive offer out there. How do you do that in the circumstances?
Yeah, so when it goes to that situation, I mean, it really becomes like, it's a beauty contest more than anything else. So, just like interviewing for a job or whatever, that's why people start, do love letters about the home and all that stuff. Not that that's the most important thing. I think having the best offer financially probably is the most important thing, but there's lots of other little things that come into play. So, and so I think it's always helpful to think about, from the seller's perspective, and then also if there, to some, there's other, from the seller's perspective, what's going to be a good offer. And it's always going to be roughly certainty of close and certainty of proceeds are kind of the two main things that people are looking there. So certainty of closing, obviously, you as a seller don't want to put it in contract and then go out of contract because that can be absolutely detrimental to your marketing process, right? It goes, everybody's forgot about your listing, it's gone stale, people are now questioning, like people have moved on, people that have bid, maybe they bought something else. So you really want to make sure because you only get to you have all the listing agent and the seller has all the leverage. Once you
Yeah.
go and sign a contract, you're essentially exclusive. Then the leverage kind of shifts to the buyer.
Yeah.
So making sure that and how can you improve your offer with that? Well, it's things like um, obviously like there's contingencies around like financing and inspections and other things like that you can consider. And then with proceeds, I think it's obviously price is important, but then also other things that could affect price through the process of the transaction. So, like I had a listing recently, and it's like, we got this offer. It was like 5% down on an escalation clause with like way over ask. But then you start to think about that, and like if the home doesn't appraise, which, with 5% down, like that seems kind of risky. It's going to be a whole nother negotiation, right? So we're right kind of back to where we started. So I think it's really about presenting your offer, that way. And sometimes there's, and by the way, like that's not to say these things all cost money, right? Each term,
Mhm.
has a potential risk, or has a potential impact to, what it's going to cost you in the deal. But you really have to think about what's actually going to be better than the next best offer, is really how you have to think about it.
Gotcha. How does a buyer, knowing the situation and considering an escalation clause and waiving or not waiving inspections and appraisals and things like that, how does a buyer protect themselves in that situation? Because we don't, especially beginners, we don't necessarily want them to waive inspections or their appraisals. But so what do you kind of recommend that they do, but still have an attractive offer?
Yeah, I think it kind of depends on everything. I think everything in real estate, whether people don't think about it like this. People are always like, well, what's the best deal, right? Like, give me the ranked order of deals. And everything in real estate doesn't really work that way. You always have to put it in context of the buyer or the investor, because everybody has a different risk tolerance or skill level. So I think you have to put it in context there. But normally normally you're putting all the standard protections are there for a reason, right? Mortgage contingencies, appraisal contingency, inspections, outs, and things like that. So you're normally working within those frameworks. But one way to actually get a little bit more comfortable is like, so for example, with the septic, right? Like if we've already done the diligence and we know A, that it doesn't have the right septic, and B, that you can add it because we've done a little diligence on that. And we've even had, deals where everybody knew that they were going to increase the septic. So like you waive the septic contingency because you actually know it's not going to be okay, which is a little counterintuitive. But in that case, you take that off the table, for the seller. So I think you're always working with those standard protections. Some things like earnest money deposit, I always tell people to kind of be, on the margin, be more aggressive with that, because as long as your agent is making sure you're not going to breach a contract, if anything goes wrong, you're going to get that back. So that's almost like a free signal.
Mhm.
And then I think also just thinking about how, appraisal contingencies are a good one, because you know you can go over ask, and then you can kind of think about how the in multiple stages, right? So we're a little bit aggressive at first, but then maybe we think that there's a good probability that something's going to happen and we can improve terms, through the course of the transaction. So just kind of thinking about it holistically, I think, is also helpful.
Gotcha. Okay. Um, Cool. All right. So let's look at another. So let's do a flip side. So let's take a property that maybe's been sitting for a while, and blood in the water, 50 plus days on the market. There and there's no sign of another offer. Obviously there's probably something maybe wrong or some other situation or it's priced too high or whatever. How does a buyer go into this and consider throwing out something low ball but still get something to get the sellers to the table to negotiate?
Yeah, that's such an interesting one, because yeah, like normally, like, if people want to lowball, you can't lowball too early. But
Yeah,
then the reverse is also true, that people, when the price is too high, and I'm like, no, we can lowball here, then people are like, but the price is so high, he's never going to accept.
yeah,
So then it works. So if you're trying to lowball too early, you probably have unrealistic expectations. Also, if a seller price is too high, really, before they've been on the market and they've got the feedback, they're probably unrealistic at that point. So you need to wait. I actually What I always do is, I kind of like, when something good comes out but it's overpriced, you basically just hit that like heart button on Zillow, and then like you wait for it to come around, right? And then you wait a month or two. It's like waiting for fruit to ripen, essentially.
yeah.
But if it's good real estate and you see the value there, it's just a question of timing. And sometimes that's actually the benefit is always a benefit of being the only bidder on the table. Like that puts you in such a strong position. And
Hmm.
that's why I always love, when the listing has like terrible photos, it means that you have to do a lot more work as an agent because nobody's going to see that home. So you don't know if it's actually crap, like the pictures would suggest, or actually if you go there and it actually could be much better, right? So the same thing is true when you're just overpriced, but it's a good piece of real estate because once they, like this happened actually just this week. Once they do that price drop, it was a home listed at 600, and they did a $50,000 price drop. So then it's like, oh shit, like you would have almost been better off offering just before they did the price reduction,
Right.
because sometimes that's enough just to create a lot of interest, and then there you go. Once it becomes competitive, then you're probably back at that ask price. But yeah, I think you just have to read the room a little bit, and I think if it's been you're just yeah, and then I think there's certain times when you want to be aggressive, and I think you're always trying to not offend somebody. You're trying not to offend the seller, and you're always trying to get a counter right if you're going to go low, because that's almost like a wasted opportunity if you put in something low and they just say go away, go away. Like that's basically you're negotiating against yourself there if you really want to do the deal, or you're going to be waiting a long time.
Yeah.
So yeah, so I think you're always trying to figure out that dance of how do I make an offer large enough or high enough that I'm going to get a counter so that we can actually start to figure out what the real price is, and then also try to communicate it in a way that doesn't offend the seller. Like, okay, your home's actually great, but these crazy septic rules in the Poconos, it's no longer compliant, so that's $20,000, and that's why we're coming $20,000, or whatever it might be. Try to communicate that in a way, which is difficult because people can be very emotional about their homes, obviously.
Yeah. Yeah. I can imagine. Okay. So yeah, playing that. And I mean, for someone new, are they, what's the best way to figure out what the best price? I mean, it's working with your agent, right?
Yeah. Yeah, I think yes, for sure. I mean, I think like the Poconos is kind of weird because it's like, what is the best price? I mean, that can have like lots of different answers because there's homes can generate so much revenue, but then they don't appraise. And then
Yeah.
there can be a really good piece of real estate, but then like, maybe it's not as attractive as a short-term rental. But I think what I always try to do is, again, I'm an investor myself. I'm only working with investors. So I'm trying to put everything in context in terms of risk and reward. And even if it's, like just putting everything in context, right? Maybe if you are going to go over the appraisal, putting that in context, what you're getting and why, an appraiser isn't going to value the furniture or the revenue or all this stuff. And so maybe you're actually want to pay a little bit more for that. And then also putting things, doing your comps right, and thinking about, and then also just kind of like presenting a backdrop, providing as much information as possible so that people can kind of put that opportunity in context is really, I think, the name of the game, because there's no investment is not going to have risk. It's about you know, understanding that risk as much as possible.
Okay. Yeah, for sure. All right. Um, this is an interesting one that we put down, but how do you feel that negotiating on an STR investment is different than a traditional home purchase?
Yeah, that's such a great question. So Um, I think it really comes down to that, investor mindset versus, just so a traditional real estate purchase is just a consumption, right? Like,
Hmm. Hmm.
like it's highly emotional.
Yeah.
Um, you make a ton of money and you really like the home. Who freaking cares about what it's worth or anything else, right? It's like, does it have the kitchen? Does it have what I'm looking for? Maybe there's nothing else on the market. So I just like you all. it's so much more emotional, and also it really, you don't have a lot of options, right? So you
Right.
can't just say, if you need to move in a certain time frame and your family is like, very dependent upon that. You can't just say, oh, okay, well, we'll wait for the next deal to come up, right? Like, it doesn't work that way if you have a job and a family and everything else. So that's super emotional, and I think it's very different. I think with an investor, it's a little bit more dispassionate, but it's also, I think what it comes down to really, I think, is around information. So obviously, from an investor perspective, you want to get as much information about the deal as possible.
Mm-hmm.
I think where listing agents go wrong is sometimes they try to withhold too much information.
Mm.
So realizing that, like, no investor, it's like, public companies have, public filings for a reason, so that people can read them and be like, hey, okay, like, this is the good, this is the bad, but it gives you confidence about what you're buying in terms of an asset, where, you don't want to share everything, right? Some things maybe you want to withhold, or you want to communicate it in a certain way. But, some listing agents, you call up, you ask for information, you ask for, like, things like revenue, and they're just like, no, sorry, I'm selling a piece of real estate. Well, like, that's almost a hard stop for that investor. So
Yeah.
I think that's kind of, and I think the other thing that, I think short-term rentals are such a new kind of emerging asset class, where I think there's often more opportunity than you would think. And so you kind of have to treat it. I think there's often like win-win opportunities for both sides. So I think you have to think about it a little bit differently.
For sure. Yeah, absolutely. Moving through like just beyond like the offer. So when you get something under contract and you get to inspections, and let's say that there are just a number of items, which is pretty common in the Poconos, that need to be repaired. How do you, with your buyers, how do you approach going to the seller and saying, hey, we either want you to fix this, or we want some sort of credits, or we want something taken care of? Because you should probably have fixed this before you sold the house. Like, how do you approach that? What's the best way to, and how do you handle that?
Yeah, I think everything is in context to, what the situation was. So, like, if it was a multiple offer situation,
Yeah,
and, I've seen this before, where people come in and it's just like, okay, well, we want $10,000 credits for this, that, and the other. And they're like, well, we have like a backup offer over here that's higher than your initial offer. So, like, why would we do all of
you're
that?
right. Right. Yeah.
But most of the time, I think, I think I normally, you can kind of, I think sellers can kind of sniff out, hopefully you've done the right deal up front. Again, this is going back to like thinking about the transaction holistically, because if you don't want to do something you don't want to do up front, and then like the need to get it back later, it's, there's always a risk to whether or not you're going to be able to renegotiate
Right.
certain items. But yeah, I think in most cases, there's kind of, there's two different buckets to it. One is that, like, a savvy real estate agent or a savvy real estate investor, like, hey man, this is a problem. Like, you got water in your crawl space. Like, this is a structural, not a structural issue, but this is a significant issue. There's going to be mold. It's a health thing. It's going to deteriorate, the foundation over time, et cetera, et cetera. So there's certain things that I think, like, a real estate agent or real estate agent can both look eye in eye and be like, yeah, this is kind of messed up. Okay, like, they need to fix it. Right?
Yeah.
And then you're hoping that the listing agent can communicate that to the seller, and then, so I think there's a lot of those things, and I think you go hard on those things, and especially because real estate is an asset. Certain things are easy to fix, but certain things are expensive to fix, and you want to maintain the integrity of that asset. But then there's other things that, of course, are just important to that particular buyer, and so I always, again, just try to put that in context, with the buyer, like, hey, maybe that only costs like $300 or $400 to fix. So, like, maybe you want to ask for that. Maybe that's not so important, but maybe it's important to them, or maybe there's another reason why it's important. So I think it's just kind of navigating that conversation, and inspections are kind of, it is a little bit of a tricky situation because you really have to, um, you don't want to go back with a crazy reply and then you lose all credibility with the seller and then you get nothing, right? And
Right.
so you need to kind of it's not even pre-negotiating with your client, but just having that start, like, yeah, this is actually a problem. Hey, this isn't so expensive, and then kind of thinking about how you go back to a conclusion. And you just never want to. I think you don't want to lose credibility with a seller, and I don't think you want to just make them think that you're just out for some extra cash at the end of it. So I think that's kind of the best way to handle it.
Gotcha. Okay. All right. Um, Recently we've seen a wave of, and man, this has been happening everywhere. Appraisals just off base. Whether they're too like just too low. Um, and coming in too low. I don't know if all the appraisers went to like some sort of convention and they're like, we're gonna lower prices. Like, I swear, I was like, I kid you not, man. Like everywhere, like name a state. I'm like, yep, we had an appraisal too low there. Come in low. And then like magically they'll go get another appraisal and it'll be fine. So, but anyway, dealing with too low, like, so if there is an appraisal gap, meaning that the buyer offered it 500 and it comes in at 475 for the appraised value, how does a buyer approach that situation and negotiate that the best of their ability?
Well, I think going in, I think number one is that I always try to just, what you don't want to do as a buyer's agent is you don't want to come in and the appraisal comes back low and it's like what in the hell just happened, right? Like you don't want your client to be completely blindsided. So I kind of prep
Yeah.
people and we do comps, and then, but even then, like sometimes the appraisals are kind of crazy because an appraisal is one person's opinion of value. And like you said, you get another person's opinion and it's completely different. So you really have to put that in context. And I think, and through having those pre conversations about it is also like, a low appraisal is an opportunity possibly to get a better deal. But it depends on if it's the right fit for you because some people just don't have the cash to make up the difference. So let's say in your example, $500,000 home, but the appraisal comes in at 430. Well, this has actually happened. So my sister-in-law, which is my family member, we did the 5,000 over ask, and then the appraisal came in low, and I'm like, this is great. I loved it at 5,000 over ask. If we can get it for less, I love it even more. If you have the cash to make some of that up. Sometimes it's just a deal breaker. But normally the process, it's really annoying process, to be honest, because it's two people, arm's length transaction. They've agreed on what the value is, and so for some guy from to come in and be like, oh yeah, it's like $80,000 less, if there are comps to support that, is incredibly frustrating, and it really does draw out the process. But I don't think you can just take. I think the urge that people have is they take the first appraisal and they're like, oh, see, we got you. Here it is. This is the truth of what the value is.
Mm.
And it doesn't really work like that. You kind of have to, draw it out, right? So first, you have to look at the comps and say, how do we think this is a good appraisal, or do we think this is, or just completely off base? Because that you have to take into consideration. If you do think it's off base, or if you just want to continue to pursue the deal with the best possible financing, LTV that you can, the first step is normally not like to negotiate; it's to do a rebuttal to the appraisal, and that normally isn't successful either. But oftentimes, you would actually order a whole nother appraisal, and
Mm.
it is annoying because it does take time. But also, you have to consider that if it comes back, you're almost. This is one of the weird situations where sometimes you're almost in the same. Your incentives are aligned with the seller because, like, yeah, hey, if you want to get like 90% LTV, like you actually want the home to appraise, and so does the seller, right? And then there's nothing really to talk about. So you get that second appraisal, and if you get that second appraisal at that point, you've done the rebuttal, you've done the second appraisal, and it still comes back low. Well, now you're actually in a much better position to negotiate as well. And I think it kind of just depends It depends on the asset in the home. But I think with short term rentals, I think most of the time there's a little bit of give and take. So you're normally going to meet in the middle just because the short term rental asset class is so it's so different than a traditional home, and there's lots of intangibles and revenue and furniture and things like that. So I think it's most I've rarely seen, because I'm only working with the best homes too, right? Like I'm not sending like crappy homes to my clients. I'm only sending
Yeah.
like the top of the market. So if it's really a good asset, it's kind of hard to just say, okay, well here we want like complete reduction of purchase price to 475. So it's normally in the middle, but again, for the right buyer, I think that's an improvement of terms for them if they can kind of meet in the middle, give or take.
Yeah, yeah, that's really okay. It's really interesting. Cool. All right, man. As we kind of wrap up here, what other thoughts, recommendations, words of wisdom do you have for about negotiating for buyers?
Yeah, I mean, I think like actually using finding a really good buyer's agent is really helpful, and I think part of why that's helpful is because I think so much of the negotiation happens before the negotiation in terms of being prepped and knowing what you're looking for, and just knowing what that buy box is and knowing what you're capable and what because if you have I mean, there's only so many properties that might fit your particular needs in your buy box. So when that comes up, and if you really are certain about that, and you also are really prepared, that is going to help you get more conviction, and so that's going to help you in the negotiation process to
Mm,
actually find, to be successful in an outcome, as opposed to, just throwing out offers and not getting accepted, or trying to over negotiate and falling out of contract.
yeah, I really like that. No, that's good. That's awesome. Cool, man. All right. What's a way for people to get in touch with you if they want to learn more about the Poconos and investing in that market?
You can get in touch with me so you can get in touch with me on Facebook. Just all my social media is just MV as in Victor Klein. And I'm also on the Savvy website, so you can go to savvy.realty/Poconos. And if you go there, you'll actually have a selection of a bunch of really cool short-term rentals, as well as a link, to my calendar. So if you want to set up a call and talk about the market.
Is that so? Your handle is at MV Klein.
Yeah, on Twitter it's MV Klein, and then Facebook
Does
/MV
it look
Klein.
like this?
Exactly. There
All
you go.
right, there we got it. Okay. Yeah, Michael's worked just to attest to his abilities. He's helped a lot of our clients in the Poconos acquire properties and really good deals and stuff. He's very good at negotiating and helping people kind of see. And I think he's got a very good pulse on the ground there, and he knows those other agents well. So, and that's definitely an advantage to having an agent who knows other people in the market, so they can kind of talk to them and say, hey, look, let's just iron this out, and no need to involve other people in or anything like that, other offers in. So that's awesome. So reach out to Michael. If you're watching this on YouTube, you can see it there, the tag. But if you're listening to this, it's at NV Klein. Klein is spelled Klein. So cool. Well, Michael, last question for you. What's one piece of advice or wisdom that you'd give to short-term rental investors to help them cash flow positive with their STRs?
Yeah, I mean, it's really kind of my piece of wisdom was just to be prepared. I think with investments, what you're trying to do is you're trying to get conviction
Mm,
about making a decision, because there is no right answer and there's no one size fits all, and every investment has risk associated to it. And so, as like Bill Face says, he doesn't even look at revenue. He just kind of like he has his own model about what he's going to do to the property, and so and you come to your own conclusions and you want to get to that conviction. So I think that's what every investor should try to do before they pull the trigger on an investment. And there's lots of ways to do that. If you don't have the resources, you should get them. So whether it's working with a coach or a consultant like SDR Insights, or just starting to do a lot of research. I always recommend like taking back, like batting practice. And so look at deals and say like, what would I offer? And then you can do this for free on Zillow, right? What did it sell for? What did I think it was worth? What in you know, and so many questions come out of that. And so if so what you're trying to get to is a point where like, you don't have questions, but you just have conviction. You're like, yep, this would have been awesome for us, and I love the property. So yeah, so reach out to me, or reach out to the short-term rental community has so many different resources, which I love. So reach out to anybody in the community, and you can probably start to build that conviction on your own.
Yeah, awesome. Cool. Well, I appreciate that, man. Good advice, good wisdom. And definitely listeners should be doing that too. So um, cool. Well, Michael, I think that this has been super helpful, and hopefully people have learned over these last like this week's episodes of feeling a lot more confident going in and negotiating and approaching these deals. I think the biggest thing that you talked about stood out to me was do that research beforehand. Don't just look for properties and then just, hey, what can we do? What can we offer? Because I think that sets you back in terms of the knowledge of knowing when and how to negotiate to get the best deal possible. So understand the market, have the resources before you even start looking at properties, and then go in and start hunting for deals. So thank you so much, Michael. Thanks for being on the show. Really appreciate having you on, man. And I hope everyone enjoyed this episode, and I will see you on the next week of Cashflow Positive.
Thanks, Kenny.